Hey guys, how are you? I hope everyone's doing alright at home, staying safe, staying at home, not going out unnecessarily like what we have here in Singapore. Like everyone's just going out and I've got no idea what. You see people hanging out in the void decks, you see people hanging out in the parks, you see people almost everywhere. But our government actually told us that try to go out if you need to go for essential stuff like groceries and stuff. And at the same time, I hope all of you guys are just washing your hands after you do everything, making sure you do like that 20 seconds of like rigorous washing, even up to the freaking wrist, and just to be safe and just to be clean. And also, if you have to go out, you need a mask as well. And let's get started. So if you're the first time watching this, thank you so much for tuning in and giving me your time. If you have been here for a while, thank you as well. And if you're not subscribed yet, please hit the subscribe button so that you support a small creator like me. Alright, so in the last episode, we talked about the different kind of stocks you have and how you can start your trading journey as well with the opening of a brokerage account, the type of stocks that we have, the growth stock, the dividend stocks, the IPOs, and the defensive stocks. So if you haven't watched that video, I'll put it in the end card where you can actually watch that video after this one. Yeah, don't skip this video, watch it after this one. So if you have watched the previous video, you guys might have known that I switched to Tiger Brokers from Interactive Brokers. One of the main reasons for the switch is that with Interactive Brokers, if you're not trading or buying stocks on a monthly basis, there is a $10 USD charge if you're not a US citizen. Unfortunately, I'm not. And therefore, I'm being charged $10 a month if I do not buy a stock within that month. So the last few months, I wasn't buying stock, so you know, it goes away. That was one of the reasons why I switched to Tiger Brokers. And fees-wise, Tiger Brokers I think charge about $1 more than what Interactive does, but you know, it's negligible if you don't trade as often. I try to buy it as often as I can, but you know, you can't always get stocks at good prices. Right, so here's my portfolio, and you can see recently I just did a deposit of $400, and I also did a purchase of LTC as well as Pfizer. So these guys are actually dividend stocks and as well as a defensive stock. The reason I bought LTC was to just try out a monthly dividend stock and see how it goes. I'm not too sure how it's going to work out, but so far it's working well. And I also have Pfizer, which is one of the candidates for the COVID-19 vaccine. So it's going to be the rush of the vaccine creators. Hopefully one of them wins. I have J&J as well. These guys are also in the list for creating a vaccine for COVID-19, which is affecting all of us right now. I mean, probably the only ones that are working right now in this situation are people that are frontliners. So you have your doctors, your nurses, your surgeons. Probably these are the guys that are working the hardest right now, as well as F&B providers. Pretty much most of us are all stuck at home. Alright, so today we're going to be exploring what an ETF is. And an ETF basically stands for exchange traded funds. So what happens in an exchange traded funds is that it has a portfolio of underlying assets rather than just one stock by itself. And ETFs are traded in the market like any other stock, but an ETF can contain more than 500 stocks. So like for example, the S&P 500 tracks or contains 500 of the top large cap companies of the US. So it's like buying one stock but getting 500 of small little ones inside. So in Singapore, we have the STI ETF, which tracks the Straits Times Index. So basically, we don't have 500 companies here that are listed. What happens is that the STI ETF actually tracks the top 30 most actively traded companies in Singapore. So we have companies like DBS, OCBC, UOB, Singtel, Jardine, Keppel, Thai Bath, and many more. So not many, but 30 of them. So these are just some of the companies that are inside or within the STI ETF fund. If you're still a little bit blurry about what an ETF does, or what an ETF do, or what an ETF is, just imagine this. Imagine that you're hungry and you go to a restaurant and they have all kinds of dishes on the menu, but you only have one stomach and that is all you can eat. You don't want to get sick eating too much, and you don't eat too little and not be filled. So which dish would you pick? They have lamb, they have steak, they have fish, they have very good salad, they have very good soups, very good desserts. But there's only so much you can eat. So which one will you choose? So basically that's what the stock market is like. It offers you different kind of stocks at different price ranges, and not everyone can afford the same stock, because essentially all of us are different. We have different financial goals, we have different financial backgrounds, and we have different financial situations as well. So what the restaurant does is it creates a platter that allows you to try every single dish that is on the menu in small little minute pieces, letting you have a taste of what is it like entering the stock market or owning a certain kind of stock. So basically that's what an ETF is. It's like a platter of stocks that comes in different weightage. So for example, if you're looking at the STI ETF, right? We have like 59% in the financial sector, so those are your banks. We have 13.29%, which are in the industrials like Capital Corp. We have 9.24% in telecom, which is Singtel, StarHub. We have 8.2% in consumer services. We have 4.3% in oil and gas. So basically, by getting an ETF, you're actually exposing yourself to the whole market and not just limiting to one vertical itself. In the previous video, we talked about diversity, right? So this is how we can diversify our portfolio. Getting an ETF actually helps you a lot, because you don't have to calculate yourself like, oh, I have like 1,000 shares of DBS. So how many percent of that is my portfolio? And then I have a bit of Singtel, I have a bit of Capital Corp, I have a bit of ThaiBev. So instead of you creating your own ETF or your own portfolio, the market has one that you can already purchase. But then again, because buying from the market directly, you're not able to control the weightage that you want. Some people prefer to have more on the financial side, some people prefer to have more on the consumer services. So essentially, by having your own portfolio, you are in a way creating your own ETF as well. So with ETFs, it comes with it's like a love-hate relationship. It gives you diversification in your portfolio, but it doesn't really allow you to control the kind of stocks that you want to have inside. So basically, if you really want to have a certain stocks in your portfolio, you might have to create your own ETF in that sense. Otherwise, you can look around like STI ETF. There's one that's with the Nico, there's one that's with the Spider. So do check them out. I can leave you some links in the description below. But in recent times, some of the banks here in Singapore, they actually created a savings account that allows you to put in as little as $100 a month to actually purchase some ETFs. So basically what happens is that instead of going into the market, buying a lot, because in Singapore we have to buy stocks in lots. We cannot buy just one or two stocks, right? We have to buy it in lots of, I think the minimum now is 100 stocks or 100 shares. And basically for the STI ETF, which is priced at $260 now, you will need to spend about $300, including all the admin charges and stuff. You have a little bit of change for coffee after that. And you'll be a happy owner of 100 shares of STI ETF. But the downside of it is that not many people are able to fork out that $300 in the beginning. So what the bank does here is that it gives you an option of doing a monthly installment payment or monthly savings plan, in that sense that you just need to deposit $100 into the account, or you can put it as a gyro and it deducts $100 every single month, and it buys the STI ETF in small lots. And that allows you to own some shares of the STI ETF and also allows you to get some passive income. Like, why not? It's definitely going to be better than banks, right? The banks pay like a 0.05%, but I think the STI ETF pays you about 3.4 or 3.5% right now, based on the current price. Alright, so what do you guys think of the ETF? Is this something that you would trade? Is this something that You might be like, oh yes, it's something that I want because I don't have to research so much. Everything is done for me in a way because the fund is structured in just a way it is. What do you like about an ETF, or what do you not like about ETF? Or do you even invest in ETFs, or do you prefer holding shares? Let me know in the comments below, and if you haven't pressed the like button, smash it right now, and I'll see you in the next video.